long presentation. I'm going to give you a flavor about the trends and the current environment of the fertilizer world. The agenda for this lecture would be a few words about ICL Growing Solutions. For those of you who don't know, we have 13 R&D centers. We are a part of growth of the big ICL group. We have more than 20 production sites, and we'll talk in a second why it's important. We have more than 4,000 products that we sell, 350 patents, around 3,600 employees, out of which 500 plus agronomists. Thank you, Sebastiano. And our revenues for 2024 were around $2 billion, only for the growing solutions part. When we talk about our production sites, we are very versatile. So if we start, of course, from Europe, we have a water-soluble NPK plant in Belgium. We have a controlled-release fertilizer plant in Netherlands. In Netherlands, we also have a PK, NPK, and granular fertilizer plant, and also in Germany, in Ludwigshafen. In Spain, in the Totana area, we have basically a plant for water-soluble NPK and mainly liquid fertilizers. In the UK, we have a few sites. We have the big mine for polyphosphate, Bolby. We have a small site for liquid fertilizer, water conservation agents, and adjuvants, which is called Amiga. And we have a site for growing media, which is in Notbury. When we go to Israel, in our division, we have a water-soluble NPK plant in ICL Haifa, where I sit actually right now. We have an MKP and Pecacid plants in the south of Israel, at Novapik, at Rotem. When we go to the east, we have basically in YPH in China, a plant that serves the growing solution division in terms of MKP, MAP, and water-soluble NPKs. We are now building a water-soluble NPK plant in India, which would be online by the end of this year. And when we go to the west, we have in the US a company called Custom Ag Formulators, a recent acquisition with two sites, one in Texas and the other in California, that produce water-soluble NPK and water-solubles in general, and the liquid fertilizers. And we have our site in South Carolina, in Charleston, which produce controlled-release fertilizers. And then, of course, we have Brazil, where we have 6 different sites out of an acquisition we made a few years back that produce a vast variety of products: foliar liquids, water solubles, biostimulants, micronutrients, controlled-release fertilizer, granular fertilizer. So a vast variety of products produced in Brazil. And this is due to that, we have a very wide variety of products, which I talked before, straight, so MAP, MKP, Pecacid, water-soluble liquids, biostimulants, whatnot. Of course, for the big division, we have also the potash and the phosphate, the TSP, the SSP. But again, we are now focusing mainly on the specialties, which is the day-to-day work of the growing solution division. Now, we work in the specialty nutrient market. And how do we define it? So specialty nutrients, I will read it, are inputs formulated to address the specific needs of a plant, the soil, and the prevailing application conditions, while supporting nutrient uptake and also reducing losses to the environment. And when we try to evaluate this market, we talk about a market of 30 to 40 million tons, between 20 to 30 billion dollars, and it's only increasing. You can find there all the products we discussed before, including biostimulants and nitrification inhibitors, and also KMS, which is basically products like polysulfate, and all the water soluble that we know, SOP, MAP, MKP, out of which, of course, we produce also water soluble NPK, which is also counted in this chart in order not to do double counting. So this is the market we play in. And when we look at the trend of this market, and we see whether it's a market that is going to provide growth to the world, so we're looking at a few angles. We can look first at trade restrictions, which we'll talk about in this presentation. So trade restrictions, of course, are a challenge to this market. Once, for example, China closed the border for MAP, and it's hard to get MAP as raw material for downstream production, it creates a challenge for this special nutrient market. Governmental regulations, however,
it's a big opportunity for this market. Of course, we have the Green Deal in Europe. We have the biodegradability standards for coating of fertilizers, which is good for this market. We have India subsidies for drip irrigation. So in general, the government, which by logic goes to a greener world, support the specialty nutrient market. Energy prices, I think it's a mix. So for example, if energy prices go up, in one side, the nitrogen part of the business will go up, and then it will create an issue on affordability for the downstream products. On the other side, if, for example, urea now is very expensive, farmers may look to use more efficient solutions for nitrogen application. For example, control-release fertilizers, which is part of the specialty nutrient world. So here it's also a mix. The battery energy boom. So yes, here, of course, in China, there is a big demand for specialty phosphates for the batteries, for the electronic vehicles. And this is, of course, a challenge for this market. So when we look at these four factors, it's kind of mixed. But we have four more factors, which are more related to, let's say, the environmental stage of the world. So climate change. Climate change, of course, brings us, as Sebastian just discussed, to look for more efficient solutions to deal with stress, for example, which is like biostimulants, which drives the world more towards the specialty nutrient market. We look at soil conditions, of course. Again, I can give you an example in India. An analysis that we did in ICL showed that many soils in India are in very bad shape. And this is part of the reason the government there is now trying to reduce a bit the subsidies and trying to implement more water-soluble fertilizers for the soils there. Arable land, as one of the questions mentioned before, again, we need to grow more with less land. No doubt about it. We need to be more efficient. Nutrient use efficiency, which is exactly what the specialty nutrient market is all about. And of course, water availability, not only availability, also price. Water are becoming more scarce and more expensive. At the end of the day, we need water use efficiency products, which is part of the special nutrient market. And of course, here the opportunity for this market outweighs the risk. And this is why we, of course, focus on this market. But we are not at normal times. I put some flags here on the presentation. You can see China, Israel, Ukraine, Turkey, Russia, Iran, USA, and the European Union. So we live in a crazy world today. Of course, we see the trade war between US and China. We see the real war between Israel and Iran, sadly, which we hope we reach the ceasefire this morning. We see the situation between Russia and Ukraine, and we see how the EU builds sanctions against Russia based on this situation. We see that Turkey brings embargo on Israel material, for example. At the end of the day, it's not a normal market, and every day we face different things. So let's see some examples. So as we said, we have tariffs. The next slide, we discuss specifically about tariffs from the US and also also in Europe on Russia. We have embargoes, as we said. Turkey is not buying now goods from Israel, and the customers who used to buy Israeli material, quite a lot of customers, basically need to find alternatives. Apologies, guys. I may have to drop in 2 minutes due to some situation here, but we'll continue for now. End of the day, so the Turkish farmers or customers need to find alternatives. We talk about sanctions. So EU has sanctions on Russia, and this creates also disruption in the supply of certain fertilizers into Europe. We talk about the trade war. So basically, between China and the US, as I mentioned, logistics disruptions. Again, it was a good visualization to show you that the world is currently not as usual. So we were at logistic disruptions. We all know about the issues that we have in Bab el-Mandab, and we all heard the latest threats from Iran about Straits of Hormuz, which can cause big disruption about the oil trade of the world. So of course, we also experience this. We have labor shortages. So we all know about, for example, the immigration policy of Donald Trump. And I don't know about you, but last time I was in the US for work was around 6 months ago. And wherever I went in the field, I only saw Mexican workers. And I assume if the immigration policy continues, there will be a big short of working hands in the US, which will need to be addressed. and which will affect the efficiency of the farming there. And of course, we have export restrictions. Talking a bit about, but again, before we get there, but at these very, fluctuating times, a broad range of products like ICL have with diversified production locations. So for example, if one location has an issue regarding export restriction, logistics, something like that, we have other facilities to serve the relevant market. So in this kind of world, I think ICL is equipped to weather any storm, and this is an advantage that we have right now. When we talk about the tariffs, so the US is very complicated. It's very hard to follow because Trump basically changes his mind every day. But in general, what we know today, so Chinese goods in the US are tariffed at 30% until August 10th. If no agreement or deal is reached between US and China by August 10th, they are going to face returning back to the levels of 145% or even more. Most goods for other countries until next week, 1st of July, are tariffed at 10%, but as of next week, it ranges from 10 to 50% based on the country. For example, Israel exports to US will be taxed at 17% as of next week, as of July 1st. Steel and aluminum imports are at 50%, automotives are at 25%. Almost, most of the N and fertilizers are between the 10 and 50 we mentioned before. However, K, mainly potash or SOP, is exempt from the tariffs. It started from the fact that Canada, the issue about importing potash from Canada to the US rose a big debate in the US. So this is why Trump decided that K fertilizer are exempt from the tariffs. And surprisingly so, also Russian products are exempt from tariffs in the US. So every country in the world pays between 10 to 50%, China maybe even 145. However, Russia, 0% tariff for Russian material. And there is more threats. For example, there is a certain shipbuilding remedies, not exactly tariff, but fine, that Trump wants to impose, basically saying that if a Chinese built or owned vessel, or even a vessel that has Chinese spare parts as part of it, wants to dock in a US port, it has to pay a big amount of money. I mean, more than $1 million. So actually, this is a big threat because majority of the vessels have some Chinese parts inside them. But what to watch? So we need to watch the discussions between UK, China, and the US right now, seeing where it lands in terms of the tariffs. We need to look at the existing trade deals. So UMCA, United States, Mexico, Canada. Canada right now, I think things are a bit more relaxed with the US. Mexico, there are still discussions. We need to see where it lands. Labor shortages, I mentioned before. Again, there are also negotiations with the EU, which we're supposed to get an update by July 9th on where it stands, and then we'll know more about the tariffs for the EU countries. And of course, every day a new tariff threat from the US. When we talk about the EU tariffs, it's mainly in order to counter the Russia and Belarus issue. So basically, the EU have announced they're going to apply tariffs, vast amount of tariffs, on fertilizer falling under HS codes 3102 and 3105. It's mainly NPKs, MAP, DAP, and N fertilizers, mainly urea and UAN. The rate currently is 6.5%, and it will go and increase every given year. You can see in the bottom side of this slide an example about urea. So basically, urea today, let's take the FOB price and logistics and the 6.5% tax. So you get to, let's say, $532. But then after 1 year, you have additional 40 euros. And then after 5 years, you end up with additional 350 euros per ton for this kind of fertilizers. Again, I don't know the current ability to replace Russian urea completely in EU. So it may have an effect, and I guess things will develop as we go along. But currently, this is the latest announcement by the EU. Again, imports will be kept. It's not so important. But what's important is that the following are excluded. So MOP, SOP, PKs, SSP, TSP are excluded from the proposal and are not subject to tariffs. When we talk a bit about the NPK market, so where we are headed today, what is the sentiment in the market? So about nitrogen, the signals are mixed. They are mainly sentiment-based, and this is why they're a bit bullish. So in general, we know that there are the tensions, the geopolitical tensions, so Middle East, of course, Israel, Iran, and also the Russia issue. So this caused prices to go up. Also India, which are, again, of course, a big market, are failing to source urea based on their tender. The reason for that, the key importers are comfortable. They don't feel they need to sell at certain prices to India. And also China exports to India right now are non-existent. China are not selling urea to India right now, which again makes it difficult for India to source urea and also impacts the prices on the upside. And as every time in summer, Egyptian announced some summer outages. I don't know if it's real outage. I don't know if it's a way to play with the price, but it is what it is. What we need to note, so I think I start not from the first one. One is that there is large potential for Chinese export. If they will decide to sell to India, currently they don't do that, but if they will decide to sell to India, it may affect the nitrogen prices or the urea price quite fast on the downside. We need to keep an eye on grower affordability. So end of the day, it all comes down to what the grower can pay eventually. And also on the EU gas prices. The EU gas prices today, I don't think support such high price levels. So end of the day, we need to keep an eye on that. So in general, from nitrogen, my point of view, it's bullish, it's on the upside, but it's very sentiment based, so it can change. However, for phosphate, I think fundamentals are stronger, so it's not just sentiment based. Basically, we see strong global demand for DAP and MAP. We see limited DAP stocks in India, which pull the price up. We see that the real cost of the producers went up. Sulfur went up drastically, and as such, the cost of the phosphate fertilizers, such as DAP, also went up drastically. So it's not a margin play. Really, cost went up. There is a short Chinese window. So the Chinese announced they're opening their export window for phosphate for 4 months. And by the way, everybody are now stocking up. So again, after that, of course, there will be a shortage in the market. We'll see in a second. Again, the EU quotas on Russia and the shift away from Russia, as we saw before. We again need to keep an eye on grower affordability. We need to note, again, Morocco has exported this year, the first half of the year, more than ever before. So this could also have an effect on the market if it continues. And we need to see how the Chinese exporters behave. In general, some of them are finding outlets. So you don't export straight P, you export an NP blend. Again, it works in some cases. So we need to see how this develops. And in terms of potash, also here, fundamentals are firm and they support the price recovery. We see cutbacks in Russian and Belarusian production. We see some production challenges in Laos. We see basically strong global demand right now, and affordability is okay at this price level. Limited stocks in India and China and Southeast Asia. And of course, the tension in the Middle East, again, of course, also we're there. However, the tension between US and Canada eased. As I said, also Trump announced that the tariff will not apply to potash. So this is also affecting the market. So in general, if we look at this slide, I know it's very busy. We are on an upward trend, a very bullish trend in the market in terms of raw material prices, in terms of nutrient prices. Phosphate and potash, I think fundamentals are very strong. Nitrogen, it's sentiment-based, and we need to see how it plays out. So let's talk a bit about water-soluble fertilizer. So we talk about MAP. All right, so we know that there is a short Chinese export window, and also there is a big demand in China for MAP for the battery market, the electronic vehicle market. And when you look at the first graph, basically 0 means a balanced market. If we are above 0, it's oversupplied, meaning that prices will go down. If it's below 0, it's undersupplied, which would say that prices should increase. Right now, we see that this oversupplied market between July and October, it's kind of artificial because this is the time in which the export window in China will be open. But then after this period, and everybody will be stocking up right now. And then after this period, it will be an undersupplied market. and the prices will for sure go up, and whoever did not secure the MAP during these months will for sure have an issue. And also in terms of the prices, so I don't have the outlook right now. We see right now that it's relatively stable, and I think as we go along, as I said, towards October, the prices will only go up due to the fact that we'll enter into an undersupplied market. When we look at potassium nitrate, so again, it's also a sentiment based. We know that a big part of the production is in the Middle East, both Jordan and India, Kemapco and Haifa Chemicals, and of course SQM in Chile. MOP prices, as I said, are moving higher. So never mind how you produce, or whether you are SQM that produce based on sodium nitrate and KCl, or whether you are Haifa or Kemapco that produce based on nitric acid and KCl, you are dependent on KCl to produce potassium nitrate. End of the day, once KCl goes up, also the price of potassium nitrate will slightly go up. And we know that Russian production is impacted by the conflict with Ukraine. We only heard, I think it was last week, that Eurochem facility for potassium nitrate in Russia was impacted by a drone strike. So it also affects the availability. In general, I see a kind of balanced market for potassium nitrate in the coming 6 months. And prices, I guess, will go slightly up based on the KCl trend. Regarding calcium nitrate, it's a bit of an issue. Right now, I think we see a weaker demand in China and we see better availability. However, we feel based on a historical trend that basically demand will accelerate in India, Kenya, South Africa, and Australia in the second half of the year, mainly India as of October. And this will cause an undersupplied market, and this will cause prices to move up. So I will expect also, as we go along towards August, September, and mainly October, prices of calcium nitrate will move on the upward trend. Well, let's talk a bit about the crops and then some takeaways. So this is kind of a complicated slide. I will try to explain it. On the x-axis, the horizontal one, basically you see the current months versus the 5-year average, or how the specific crop, which we'll see in a second, move this month versus the 5-year average. On the y-axis, you see the current price of the crop versus the previous months, how it moves month over month. So basically, we want to be on the upper right side of this slide. It means that we're better than the 5-year average in terms of crop price, and we're better than the previous months. It's also good if we are in the lower right side of the slide, where we are stronger than the 5-year average, however weaker than the previous months, but still on the overall very good. Also, if we're on the upper left side of the table, it's relatively okay. We're weaker than the 5-year, but we're improving over last months. But if we are on the bottom left side, it's not as good, because we are weaker than the 5-year average and weaker than the previous months. And if we look at the relevant indexes, which are published in various ways for cash crops and commodity crops, the main thing we see, the commodity crop right now is not in the best shape. So wheat, corn, rapeseed is not in the best shape. We also see it. It's closer to the left bottom slide of the slide. However, in cash crops, so strawberries and cocoa and coffee and zucchini, peppers, orange, lettuce, avocado, we see more to the right side, more towards stronger than the 5-year average. So basically, cash crops are again a better crop to focus on right now, and we see they have better economics. So let's talk about some key takeaways. So key takeaways for me is that various cash crops, so coffee, cocoa, avocado, oranges, still offer good margin for the farmer. We know that there is elevated geopolitical tension, and this results in sentiment-based pricing. So yes, some of the pricing we see today in the market is very sentiment-based, like in the stock exchange, and we need to see how it develops, mainly on the nitrogen side. Tariffs are very messy and complicated, and we need to follow on the day-to-day basis because it changes every day. We can only analyze what we know based on, as I said, how Trump breaks out in the morning. EU tariffs and quotas will raise domestic cost in Europe. So once you limit the export of DAP, MAP, urea from Russia, it will raise domestic costs, and we need to see how it plays out on the long run. It's nice it's on the paper, but as it goes along and it will affect farming in Europe, we'll need to see how it plays out actually. And water-soluble availability, I gave example of calcium nitrate, MAP, and potassium nitrate. It looks tight. It looks, at least for calcium nitrate and MAP, we're going to enter into an undersupply market situation. And what we need to watch? We need to watch how the escalation in the Middle East develops. Again, as I said in the beginning of the call, we hope for a ceasefire. We also saw an announcement today of a ceasefire, but sadly during this call we saw something else. So let's see. The development of the commodity crop affordability, we need to follow it in H2 to see how it develops. And again, we need to follow the weather. Weather, I think, in general, globally, has been quite good so far, but this could, of course, turn at any moment. So this is basically my 2 cents. Thank you for your time, and again, apologies for the delay and also for the fact I'm not with you there.